Opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking off the first week of March, it's Chuck, Mike, and Tucker with you. They like to say that March comes in like a lion and goes out like a lamb.
Oh, yeah.
You've never heard that?
I have.
You have, yeah.
I think mainly from you, though, to be fair.
I like to always come in like a lion and then just fall asleep wherever I am. That's kind of my thing. But listen, we got March kicking off here, and it's a pretty busy week as far as economic data. We're pretty much through earnings season, so there's not much more on that side of things. But we do have some economic data this week. Today we get ISM manufacturing and construction spending. On Wednesday, we're going to be getting ISM services, the ADP employment report, which no one really pays attention to, but it still exists, so we at least, have it out there. We get factory orders data on Wednesday as well. On Thursday, we're going to be getting initial jobless claims and continuing claims. We're also going to be getting productivity and unit labor costs for Q4, the final numbers, the final revision for the quarter as well. And then on Friday, we've got the jobs report for the month of February that is coming out, and we also have 5 different Fed speakers scheduled. So if you want something to do from 10:15 to 1 p.m., there you have a smorgasbord of Fed speakers to potentially entertain you during that time. For the next 2 hours, you're stuck with us.
Indeed.
And so looking at the economic data that we got this morning, I think it dovetails nicely into this piece from the Wall Street Journal. We got ISM manufacturing 7 minutes ago, 10 a.m. And what it showed was a slight deceleration from a reading of 50.9 down to 50.3. Now, ISM manufacturing, it's what's known as a diffusion index. They basically go out, they survey a bunch of purchasing managers for manufacturing companies and ask them questions about what's your backlog, how's your employment, what do your orders look like, how much are you having to pay for stuff, and they basically rate it on a scale from 1 to 100. Readings above 50 typically indicate growth, readings below 50, contraction, and generally it spends most of its time between like 45 and 60. That's kind of where it tends to live.
I'd imagine there's a fair bit of confusion at the moment among manufacturing managers, just specifically with White House policy around tariffs and things along those lines.
Well, and here's the thing. This has been a report that has had absolutely no signal for the last 3 years. So let's get this out of the way up front. I don't even know if we should be talking about this report because it's kind of useless right now. And it has been useless this cycle because it's been a different business cycle than every other one that came before. And so typically, look, for the last few years, ISM manufacturing has been sitting around like 46 to 48. And generally that tells you you're in a really bad recession, especially for manufacturing. Despite that, we have not seen recessionary data in the United States. We actually have seen a huge increase in domestic manufacturing spend, predominantly on the semiconductor side of things, but also electric vehicles, things along those lines. And so the data just has meant nothing, quite honestly.
And
so
it's not the only one. Right?
There's been a lot of stuff that's
There's
broken.
been a lot of stuff that has not worked, and I think the danger, though, that we have to be careful not to fall victim to is permanently saying it doesn't matter, because at some point it probably will again. It's just really tough to know when. For example, the SOM rule, the unemployment rule, where if the unemployment rate spikes by more than 0.5% within a 12-month period,
the 3-month average.
Yeah.
Above the low.
Easier to just explain the unemployment rate spiking by 0.5%.
I know.
But yes, 3-month averages on either side of it was historically, from 1960 and on, a perfect recession indicator with no false positives, and broke last summer. Does that mean that it's never going to work again? Probably not, but important to contextualize.
So, key components of ISM manufacturing that people want to pay attention to right now. Number one, hey, what are you seeing in terms of prices? Because with all the talk about tariffs and this and that, are you seeing anything there? Well, the prices paid component increased from 54.9 to 62.4. Now, that doesn't mean that prices went up 8% for the month. Remember, this is a diffusion index. It's not telling you how much things cost, but more just, hey, how are respondents saying prices are moving? And this is respondents saying, yeah, they're moving faster than they were previously. We're seeing higher pricing coming through. On the other side of things, new orders declined from 55.1 to 48.6. Okay, it's not great if your new orders are slowing. And employment went from 50.3 to 47.6. What does this mean? No idea, quite honestly. and anyone being like, oh, well, this is... Look, if you think this report means something, which it hasn't for the last 3 years, it's telling you that manufacturers are seeing higher prices coming through, and they are seeing fewer new orders and needing to hire less. That's possible, but it also hasn't matched up with the data that we've seen for the last few years. The question on this is, at what point does this regain some kind of validity? And once again, the answer is, I don't know. But it does exist, and historically it has had some signal value, so you continue to monitor it and see if it starts to correlate with, things in the real economy. Again, the reason that I think this dovetails nicely with this piece from the Wall Street Journal, the piece is titled Worries Mount That Trump Agenda is Testing Economy's Resilience. And what we've started to get the last few weeks is some weaker economic data that's been coming out. Good amount of it in the form of, survey data, just saying that there is a little bit of growing discomfort that's out there. But we also have had some weak data points as well that need some clarification from additional ones that'll be coming out over the next couple months or so to see if there is any change that is happening in the economy.
So I've got 2 what I call soft data points, surveys, how do you feel about things, and 2 hard data points, actual numbers that I would voice when it comes to this slight turn in January in terms of the data. You had the University of Michigan consumer sentiment with a big 1-month drop down to 71.7, which is not great. But it's also better than where we were pretty much all of last summer, and we didn't get a recession, so I don't want to read too much into that. We had a corresponding one from the Conference Board when it comes to consumer confidence that basically said the same thing. People are worried about the state of the economy. They're worried about prices going up. So confirmation there. 2 different surveys of households that I think historically have done a pretty good job, although are heavily influenced by political bias. And then the 2 hard data points I would look at, weekly jobless claims last week, which measured 2 weeks ago, slightly elevated. And then the personal consumption expenditures report, which came out on Friday of last week, dipped negative to negative 0.2%. And that happened at the same time that incomes were generally up. And so you could read that, as people lacking confidence about the economy and choosing not to spend in January. You could also read it as a bunch of wildfires and extremely cold weather ripping through the country and causing people not to spend because of that. So I think you can create a narrative around which direction you think the economy is going in either case. And if you want to spin this in a positive direction, your main argument is, look, we've seen this type of thing a lot over the last 4 years, and it has signified nothing in the way of economic slowdown or recession.
I think ultimately where I sit is, hey, we have a new administration that is, changing the way that things are done in D.C., and we need to see how the next couple months play out in order to see what the actual economic impact is going to be. And I think it's too early to be able to say, definitively in either direction. But we're starting to see some signs of potential slowing in the U.S. economy. And quite honestly, if you are talking about reducing the size of the federal workforce and reducing federal spending, you are talking about slowing the economy down. Like, let's be clear on this. Like, federal spending and government employment is real. Like, these are people that are employed and do stuff. You may say, well, I don't like what they're doing, or I don't think that's a good use of my tax dollars, but that's different from saying they don't exist and the money is not being spent. So when talking about this, if you say, hey, we are going to lay off X number of people and reduce government spending by Y, well, that's going to be money that's no longer going into the economy. And so I think the question that is out there that we need to be watching is, hey, is this happening in a manner that is going to allow for an improvement in the U.S. fiscal situation while also not throwing the U.S. into recession that would inherently make the fiscal situation worse, because then you have less tax revenue coming in and more outlays for things like unemployment and stuff like that. And so this is what the next 3 to 6 months is going to be about is, hey, if you're making these changes, how do they impact the broad economy? Because they are going to. We can't say that we're just going to see large changes with no impact and everything's going to be fine. We need to look at it and see how things actually evolve. And to this point, I don't think we have any data because we're 6 weeks into this puppy.
Yeah.
We're 6 weeks in. We don't even the February data. February started 11 days after the inauguration. So I think that where I stand is, hey, we're going to need to see February, March, and maybe even April data to be able to have, a conclusive trend of more than one data point as to exactly what all of this means. And I think it very much is something where we should expect to see a slowing economy. If you're talking about pulling demand out of the economy, you would expect to see that. The question is going to be the pace and the depth of that slowing, because that's ultimately what you are trying to manage in doing this is, can you avoid recession if you are reducing the amount of demand in the economy? I mean, generally reduced demand is not something that you aim for. I think in a perfect world, you'd prefer not to do it. But hey, when you have excess spending that has built up, this is the world that we are in. So I think that my point on this is, yeah, we have some questions there. The place that I get more concerned is with what is going to be kind of our next topic, which is we'll touch on after the break here, but tariffs and the uncertainty surrounding them. This, I think, is creating some unnecessary problems for the U.S. economy. And so let's discuss what we're seeing on the tariff side of things when we return.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in Elder Law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
All right, I gotta read this quote from this New York Times piece here. New York Times, not the time. The New York Times is 10:22 a.m. When President Trump announced last week that an additional 10% tariff on Chinese goods would take effect on Tuesday, Logan Vangele?
Yeah.
Sure. Immediately called the logistics company that was handling a $120,000 shipment of aquarium products for his small business. The cargo was on a ship en route from Boston from China. His message was clear: get this thing off the boat, please. And so obviously there's, this looming deadline at midnight tonight where these additional 10% tariffs on China and potential tariffs on Mexico and Canada at 25% could go into effect. And so you have some businesses that are still saying, look, I need to bring in, the supplies that I have. But in talking with more and more business owners over the last couple of weeks, I'm finding more that are just kind of in a state of, we don't know what to do. We're building contingency plans in case something happens, but we don't want to execute on anything because we potentially get hurt either way. So here's an example. Let's say that I am, Mike, I run a business importing dishes from Canada. I don't know why they're made there, but they're made in Canada.
China from Canada.
China from Canada is what I sell. And so in this world, I say, hey, my import cost right now is $10 per plate, and I sell it at 70% or 200% markup. So I sell it for $30 a plate or whatever, and with my overhead and everything, I end up making $3 a plate. Okay, great. So I'm importing this stuff from Canada, and now I get, hey, there's this 25% tariff that might come in. So my $10 import cost goes up to $12.50, just as an example, and my $3 per plate profit goes down to half a dollar, 50 cents. So I'm sitting there, I'm going, what could I do? Now I find that the fine folks in Minnesota have similar plates, similar China. This is China from Minnesota.
Yeah.
That I can buy, and I'm spending $11 a plate. I've talked to the supplier before, but I never wanted to use them because the cost was just higher and it would eat into my margins.
Sure.
And so do I go to them and say, yes, I'm willing to pay you for your product? Because if the tariffs don't go into effect, then my competitors go to my original supplier and say, hey, we'll take that inventory at 10 and undercut Chuck, who's now having to sell at a higher price or at lower margins, and I'm out of luck if the tariff doesn't go into effect.
Right. Or alternatively, do I go to my Canadian supplier and give me all you got? I'm going to take a giant loan to buy as much as I can ahead of tariff implementation to go and sit on that, but I have to finance it at 10% because I'm a small business in order to do so.
And they say because it's a bigger order than we normally do, we've got to hire additional staff, work extra shifts, and so you're not going to be paying 10, you're going to be paying 10.50 or 11 anyways for it.
Now, that's a pretty simple situation of a company that just sells presumably to customers in the United States. Imagine for instead of buying China from Canada, you are instead manufacturing cars that are sold across the globe. And you say, okay,
where should I have my facilities set up to build these things?
And what if I go and try and do that and I pull manufacturing back out of Mexico into the United States? Am I actually going to be able to sell my car in Mexico? In a place where I'm already trying to compete with ultra cheap cars from BYD that are, by most accounts, better electric vehicles and hybrids than the United States is able to make?
So it's
complicated.
This is why I ultimately have kind of gotten to the point where I'm sitting there and I go, implement the tariffs or don't. We can't go through this every month. We can't just keep doing this every month because it adds a ton of uncertainty to businesses and makes them hesitant to invest. And if businesses don't invest, then you end up with slower economic growth. So I kind of look at it and say, hey, if you want to move forward with tariffs, let's go. Like this is what we think is going to help the U.S. economy in the long run. Let's go. And if not, then we need to stop putting a potential impediment to a business expanding in the way every 4 to 6 weeks because it becomes challenging for that business to know what the lay of the land is going to be and feel comfortable with business expansion.
The other piece that I'll just mention about this that has nothing to do with the business decision, but investors, I think, are very, very clearly
not believing
calling
that
the
happen.
Trump. Yeah, calling the Trump bluff. And that in and of itself might be dangerous for Donald Trump because if markets are, then I would imagine Canada and Mexico are as well. And that administration may feel that, hey, in order to regain legitimacy and regain, people actually believing us, we need to go and implement these things, even though we don't truly want to. And so I think it is kind of forcing this administration into a corner in a little bit to not necessarily do something tomorrow, but they can't keep playing this game forever or else it's going to be boy who cried wolf, and they're not going to be able to actually negotiate anything positive for the United States.
So I think we'll see what ends up happening here. But again, the deadline is midnight tonight, and clock's ticking. Quick break here. We got Wall Street Watch coming up next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News & World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, a new month is upon us, and at the moment, markets are relatively quiet in mixed territory at the moment. Been fairly bumpy so far. at the opening bell as Wall Street awaits developments on the tariff front ahead of the looming midnight deadline, and investors are also looking toward a jobs report on Friday. Right now, the Dow is up by only 13 points. S&P 500 is down by merely 5 points, and the NASDAQ is off by about 0.3% or 52 points. Russell 2000 down by 9 points. 10-year Treasury yield is pulling back by 3 basis points, now at 4.19%, and crude oil off 0.4%, trading at $69.48 a barrel. Several crypto stocks are seeing gains on the day after President Trump announced the creation of a strategic crypto reserve for the U.S. Bitcoin itself jumped 10% to $94,000 after dipping to just under $80,000 on Friday. Shares in Coinbase, Robinhood, and MicroStrategy are all climbing on the news. Meanwhile, Kroger chairman and CEO Rodney McMullen has resigned after an internal investigation into his personal conduct. Shares in the grocery store chain are down by 1%. According to Bloomberg, Allegro Microsystems has drawn takeover interest from ON Semiconductor. The report also notes that other suitors could emerge for Allegro, and the company hasn't indicated whether it would be open to a potential sale. Allegro shares jumping by 20% on the news. Separately, Bloomberg also reporting that Prada could soon close a deal to buy Versace from luxury fashion house Capri in a deal worth $1.6 billion. That deal could close this month, according to the report. Capri shares jumping by 7%. Elsewhere, Tesla jumping by 2% after Morgan Stanley named the EV maker a new top pick in U.S. autos, with expectations of roughly 50% bounce in store. JP Morgan downgraded Southwest Airlines to an underrate rating, where the analyst said the stock's valuation was too high. That stock pulling back by 1/3%. Chipotle was upgraded by Morgan Stanley to overweight, with the firm noting that the stock is currently trading at an attractive entry point for investors. Chipotle up by 2%. And tomorrow morning, ahead of the opening bell, we'll see fourth quarter earnings from AutoZone, Target, and Best Buy. I'm Tucker Sylvan. That's Wall Street Watch.
All the big, like, high-end fashion companies really confuse me with, well, everything.
Yeah, you're not exactly speaking my language in terms of areas of expertise, but what do they confuse you about specifically, Chuck?
Well, so Tucker mentioned the name Capri. I don't even know if it could be Capri, like, you know.
I'm going Capri.
I thought it was Capri.
But
no?
they could be like Capri Pants or Capri Sun.
Could be, but I'm going Capri.
Anyways, so they own Versace.
Indeed.
Do you know who else they own?
Other Italian companies.
No.
Really?
Michael Kors.
Okay.
And Jimmy Choo.
Okay.
Which is kind of like, okay, so here's... I don't know, like, any of these brands. I've never bought anything from any of them because I don't do that. That's not me.
Yeah.
You then also have Tapestry, which is the name of the holding company that owns Coach and Kate Spade, sitting there, and something called Stuart Weitzman. I don't know what that is, but fine. Like, it's there, I guess. And so I guess I kind of look at it, and what I'm getting at here is all these companies, they're named after people because they were like designers who, made clothes originally. And now you just kind of end up under this big arm where you're just this publicly traded company that the only goal is to sell more stuff each year. Like, it's almost like you ruin the fashion part of it. And I don't care about fashion. Like, I'm sitting here in a black sweater. So, like, okay. But it doesn't it feel like more selly outy than other businesses? It's kind of like when Ferrari went public. Don't you kind of have a problem with that in a way that you don't with Ford going like public?
I suppose.
Because the whole point of these companies is to make something exclusive and to, heavily restrict the market for your good and to make something that's like really high quality that's so in demand.
And I do have to wonder, by the way, so if we take like the top 10 luxury brands, which you just mentioned, like 6 of them, how many of those products are manufactured by like the 3 same manufacturing facilities in some part of central China.
Well, I have no
guessing
idea.
90+% of it, and so, I mean, to me, that's where the economies of scale come from owning all these brands. Is saying, okay, well, you were previously sourcing your material and your manufacturing from these 5 places, but seeing as how we can consolidate under this one manufacturer, we can save some money there. But yeah, I get, I suppose, your point that the idea of luxury fashion is, by definition, exclusivity and restrictiveness of supply, and I suppose you're not getting there. But I don't know that being public does anything to change that, right? That was the same operation.
I don't know. You've got
privately.
like a fiduciary duty to shareholders in a way that you
sell as
don't
much,
if you are a privately held company. And so I don't know. It feels
which
like
is probably why fashion brands in and of themselves do not stay in vogue for a terribly
there's
long
a huge
period of
tension
time.
there in my mind. I can't get past it with some of these companies, and I don't know. It just whenever it still bothers me that Ferrari is a publicly traded company. It's like I think they sell like something. Here we go. So Ferrari sells about 9,000 cars annually, 9,000 across the entire world. And so you look at it, and if you're a publicly traded company, there are 3 ways that you can make more money. The first is to reduce your costs and increase your margins. The second is to increase your prices and increase your margins. And the third is just to sell more stuff and maintain your margins.
Yeah.
And so you look at that, and you're like, well, if I'm buying a Ferrari, do I really want them to be in like cost-cutting mode?
No,
not really. I'm not looking for Ferrari. I don't want my Ferrari to run efficiently. I want my Ferrari to be a Ferrari.
You actually only want one outcome. You want the future prices to get more expensive.
Yes.
Because if they start selling more of them, then you don't like that either, because the entire idea of owning a Ferrari is that you don't ever see any other Ferraris out on the streets.
So I guess I kind of look at it and I go, okay, so with Ferrari, the bet effectively has to be that because wealth inequality is going to get worse, you're going to be able to sell at higher prices because there will be more demand from that ultra high net worth person.
Correct.
Because remember, here's the other thing about Ferrari. You can't buy a new Ferrari unless you've already owned an old one. They don't let you buy a new Ferrari unless you've already had a pre-owned one that you bought.
Oh, I see.
You cannot just be a buyer of a new Ferrari. Now, I'm sure that if you're whoever has, $25 billion, I'm sure they'll make an exception. But otherwise, that's the entryway, is you have to have bought a used one before they will let you buy a new one to begin with. So isn't this inherently in conflict with the idea of making more money?
No.
Kind of.
I think there's just one path that you have to take if you're a brand like Ferrari, which is prices go higher by a good 5 to 10% every year, and that's the only way that you can drive your price growth.
I just feel some tension there, I guess.
Yeah.
It just feels odd to me, but I digress. John,
or you do what Elon Musk has been doing over the course of the last few years, which is sell other types of things that you consider to be luxury brands under the same thing. So you can buy Tesla tequila, a Tesla flamethrower, and maybe someday a Tesla robot. So there's a fourth way I just figured out.
Ferrari robots. Yeah. That don't drink tequila.
What if I buy a Ferrari hat or sneakers? Because they sell those.
Yeah.
Do they let me buy a vehicle at that point?
No.
Oh.
Here's the other thing about Ferrari. Remember,
$40.
So this is another thing where you sit there and you're like, something that's inherently in conflict with the idea of share price. Ferrari is one of 10 teams that competes in Formula One racing. Now, I don't know a ton about F1. I know enough to be dangerous, but I know that it costs hundreds of millions of dollars a year to run an F1 team. And there's basically a direct correlation between how much you invest into the team and how well you do, with no correlation as to the profits that you actually make from it. How does that end up attached to a publicly traded company in any way that makes sense? So I guess I just kind of struggle with some of this stuff.
I see that.
It's fine. This is what you get after I've been away for a week, is, pontificating on whether or not Ferrari should be a publicly traded company and whether it meshes with capitalism in the United States.
Chuck was clearly hanging out in Florida for a few weeks and saw a lot of luxury cars driving down the strip.
Good amount, yeah.
Well, I was driving my Toyota Sienna to, carry the kids around and everything.
You're wearing a Ferrari hat.
Obviously. Let's take a quick break here. When we come back, we'll talk jobs after this, since we got the jobs report coming up on Friday.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
In today's economic climate, managing your finances can be a full-time job. This is Mike Armstrong from the Armstrong Advisory Group, and our experienced team of advisors understands the challenges that exist and the questions you may have when it comes to your own financial strategy. Our new guide is called What Can a Financial Advisor Do for Me? In it, we'll help you find answers to some of those questions. At Armstrong Advisory, we can provide you with information that may help you with decisions about your investments. Our team can also advise you of the need to work with a professional in other areas, such as taxes, estate planning, or insurance. Understanding the role these elements play in a well-rounded financial plan is extremely important. Give the Armstrong Advisory Group a call at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Friday this week, we're going to get the jobs report for the month of February. And what we are expecting to see, or rather what the market is expecting to see, is not really too much change in direction from January. Expecting to see between 150 and 160,000 jobs created. January was 143. The unemployment rate is projected to stay at 4%. Average hourly earnings expected to grow at a 0.3% rate for the month, year over year at 4.1, which would be the exact same as the prior month. Participation rate expected to stay at 62.6%. Weekly hours not expected to change. So overall, basically the market is saying, yeah, we think that the labor market that we've seen really for the last 4 or 5 months, kind of dating back to, I think it was like September, October, where things started to turn up, still going to be in a pretty good spot with no meaningful deviation there. And based on, some of the other higher frequency indicators that we've seen, things like weekly jobless claims and the like, yeah, that seems to be a fairly good approximation. But obviously you've got, different outliers. I saw one investment bank thinks that there might only be 60,000 jobs created and others up in, kind of the 220 range. So we don't really know. And the other thing that you always have to talk about on this is there are always revisions and then revisions to the revisions. Usually those revisions, when they're finally all said and done, end up being like 80,000 jobs either way. And so, again, you're going to know as much as you can, but we're not really expecting anything either in terms of a growth explosion or a falling off a cliff for the February numbers.
Yeah, I would tend to agree. There'll be some interesting wage stuff in there, of course, as there always is. But, all sources where consumers are worried about right now would be layoffs. And whether you're looking at those weekly jobless claims, I'm looking at some data from a company called Warren Tracker that basically scours public disclosures because companies are required to file layoff claims with certain states. And whether you take a look at that data, the weekly jobless claims, there's just no indication that companies are looking at layoffs, at least on a widespread basis. Like I've heard of stories here and there of plans that have been announced, but none that have actually been implemented, or very few that have actually been implemented. And we're not seeing it show up in the data as of yet. Pace of hiring, different story. That has dramatically slowed and arguably might not be keeping pace with the growth of new people entering the workforce. But in terms of job elimination, just not seeing it to date.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visit usvi.com and use the code VIBE2025 for more information and book your trip today. That's visit usvi.com and code VIBE2025.
I want to talk a little bit about Ray Dalio's latest statement. So Ray Dalio, if you're not familiar with him, he founded a hedge fund called Bridgewater that is, at this point, one of the largest and most successful hedge funds in the history of hedge funds.
Yeah, not an idiot.
No, not an idiot. And I remember when I was like 24 years old, I thought that Ray was like the smartest dude in the room. And he's still a smart dude. He's smarter than me. but he's just another smart dude in the room, not the smartest dude in the room, in my opinion. It's a technical title. So he's got a book that he is selling, and it's all about the danger of having too much debt. And so he's on the podcast and financial news media tour right now, talking about, hey, and his quote here, if you don't reduce the deficit in the next 3 years, you're going to be in trouble. I can't tell you exactly when it'll come. It's like the heart attack. You're getting closer. My guess would be 3 years, give or take, or something like that. Okay, so here's the thing about...
So you've got some hedges against the U.S. market and economy that expire in 3 years? Is that what you're telling us, Ray?
Well, here's the thing about this is, Dalio comes out every now and then, and usually it's around a book that he has, and it's usually around like whatever the prevailing sentiment is at the time, and he talks about this stuff. So today he's, talking about, hey, there's going to be this debt crisis heart attack within 3 years. Back in 2019, he was on the book tour and everything, and he said that income inequality is a national emergency and there's going to be conflict because of it, because that's what everyone was talking about at the time was income inequality. So I'm just not sure that there's anything here because, again, like you see this every couple of years from him. He has like this big idea that he comes out with, and it's this thing that he's talking about. And it's not to say that it won't or can't happen, but much more, I don't know that his track record of like public pronouncements is particularly good.
On big macroeconomic issues. Yeah.
And the funny thing is that his fund is basically designed to be able to handle like the big macro picture very well, and it has done well.
Yeah.
But I just don't know that his public pronouncements hold much value at this point.
To be clear, his statement isn't all that different from my own view on the problem of the debt crisis in the United States. The key, very important difference is he's calling for it with a 3-year timeline, and I'm openly saying that I have no idea when this becomes a straw that breaks the camel's back.
Now, if he's right, I will do the reverse Jeremy Siegel, where I still bring up the fact that Jeremy Siegel last September was calling for 150 basis points of rate cuts within a week, and I will bring that up till the day I die. If he's right about this, okay, Ray, you got it. Let's take a quick break here. Hour 2 is coming up in just a little bit.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hour 2 of the Financial Exchange today. Chuck, Mike, and Tucker here. And market's not really doing a ton today. You got the Dow off 30 points. The S&P's down 9. NASDAQ down the most, about 0.5%, about 80 points. And again, like you take a look at what's actually driving it today, and NVIDIA continuing just to really have a hard time getting anywhere good, I think is the best way to describe it. This is a stock that, quite honestly, has just been in a kind of fairly wide but stagnant trading range since last June, when it cleared $100 a share for the first time. And it's basically, it's kind of wild to say this, it's basically been in a 50% trading range since then. Now, I know that's a big range, but it's just because this stock has big swings. But ultimately, it hasn't really been able to get anywhere. You're sitting here right now, and it's at $119 a share, which is the same place it was at on June 5th of last year. And so it's now been almost 9 months, and the stock hasn't moved during that time, which is probably disappointing to some people that, were piling into it. And there are some people who I'm sure, look, back in the start of January or in late November, might have piled in around $150 a share, and now you're down 30% or 20%, and you're like, what do I do here? But ultimately, this is a company that saw just massive explosive growth in, 2023 and really, again, even through 2024. I mean, you couldn't really say this thing was range-bound until the last 4 months, where it's just finally been apparent that that's the case. But when you're a $3 trillion company making up, 7% of U.S. markets, hey, it's going to have, an impact on those markets if your stock struggles. And so I think that's part of what we are seeing right now. Other than NVIDIA, not too much other red on the board. You got, a couple of utilities that are getting hit today. Mostly, looks like some renewable energy companies, GE Vernova and Constellation Energy is not renewable. I don't know why they fall under that category for the S&P, but whatever. So other than that, it's just kind of a regular day out there. But NVIDIA continuing to drag a little bit in recent days. 10-year U.S. Treasury seeing some money moving in that direction, down 2.1 basis points to 4.208%. And we've got oil, West Texas Intermediate, down 28 cents a barrel to 69.48. The AAA national average for gas prices down 0.1 cent over the weekend to 309 7/10. So we're still trying to get below that $3 a gallon mark nationally. We're heading right into the spring season where prices tend to move up because of reformulations for the summer. So I'm not sure we get there unless we see another leg down in oil prices here. But we've pretty much just been chopping in that 305 to 315 range for the last few months now. And we've got gold up $49.70 an ounce to $28.98 So gold rebounding a little bit here today. And that's the big stuff that we are seeing in markets.
Yeah, I don't think this was how they intended on getting there, but in reaction to that 10-year Treasury move, you are seeing the 30-year fixed-rate mortgage down at 6 3/4 now. I say it that way because Scott Bessent, Treasury Secretary, has been very public about wanting to try and move that 10-year Treasury rate down to be able to impact interest rates that Americans actually normally face, such as mortgage rates, car loan rates, and those are moving down. The problem is that they're mainly moving down on concerns about the U.S. economy.
I'm going to say something different there.
Go for it.
I think that they are trying to slow the U.S. economy down. And this is, so Bessent came out last week, or maybe it was the week before, and he was talking about, hey, we want to see a slowdown in aggregate demand, or we want to see lower demand, which is not something that you normally hear from a politician. Lower demand typically means, okay, companies and individuals are spending less, which usually is not a great thing in the economy. I think this is very much something that they are trying to sequence in that, and again, I don't know if this is going to work or not, but here's where I think they are trying to go with this, is rein in deficits as a means of trying to, create a little bit of fiscal drag in the U.S., number one, but also to make the deficit picture more sustainable. Number two is, as that happens, you do see rates come down because of, the potential fear of recession. And then the idea is, okay, as you start to see that building, release things on the monetary side, so lower rates in order to stave off recession, and also bring down borrowing costs to, help the economy avoid it potentially. Are they going to be able to pull this off? I have no idea. We're 6 weeks into this puppy. So I have no clue if they are going to be able to pull this off. But you have had White House officials say, yes, we are, looking for lower demand in the economy as a way to help manage what we are seeing right now. This could go wrong any one of a number of ways. Number one, hey, you could end up with too deep of an economic downturn, and now you have a recession, and now you've got a real problem on your hands. Number two, okay, you could help things on the fiscal side, but then you might end up undoing it all if you end up with, larger tax cuts that end up expanding the deficit, actually. You might not get enough movement on this as far as rates moving down. There may be kind of this residual inflation premium that's on rates just because investors now are worried about inflation in a way they weren't for the last 40 years. And so maybe they don't want, investors won't let rates go low enough because they have that fear built in after 2022 and 23. So there are any number of things that can go wrong. But I do think that the administration is very much targeting lower demand right now because I got to find the actual quote, but they've said so. Like they put it out there, and I was kind of surprised when I saw that. Actually, let me see if I can find the quote. But there's a piece from Bloomberg Opinions titled "Where the Stock Market Goes, the U.S. Economy Will Follow." What's the premise of that? While I'm digging up this quote,
the premise of this is based on one fact that we've covered a few times over the course of the last few weeks, which is these days the top 10% of income earners, those making about $250,000 per year households, are accounting for about half of the aggregate spending in this economy. Consumer spending by that top 10% is accounting for half. The spending there hasn't really slowed down, and you're seeing more and more demand and more supply of goods that are specifically catering to that income group, whether it is upgrades on seats on airlines, luxury cruises, all sorts of different products and services that are really targeted towards that income demographic because of such a powerful group they are in terms of spending. And the reason that one of the reasons that's been offered in terms of why their spending continues is not just because their income levels, but because when you are in that income level, a large portion of your total assets are tied to the stock market, whether it's your 401k or other buckets of money. Home values are up, stock prices are up. And so that group is likely continuing to spend at a breakneck pace, in part at least because of how well their portfolio has performed and that wealth effect that translates to. Hey, I feel wealthier and therefore I'm comfortable booking that extra trip this year. I'm comfortable spending that extra dollar this year that I might not have otherwise done if I were worried about recession and a stock market downturn.
So I think that when we look at this, there's a great chart. I don't know if this is no, it's not from this piece originally, but it was talking about, the spending in the U.S. and where it comes from. And look, it's basically that top 10% of people is half the spending in the U.S. And their spending is, as you note, and as this piece notes, it's wealth driven. It's not income driven.
Right.
Maybe the income is generated from wealth, but ultimately it's wealth driven. And so if you have a stock market that starts to teeter a little bit, do people say, well, I was going to take that trip, but now my portfolio's down, and so I'm not going to pull the money out of it because I'm a little bit nervous about it. And with so much spending tied to those higher earners, that's where you potentially end up with an issue. Now, this is not an entirely new phenomenon.
I was going to go there, yeah.
Right now, and again, this is data from Moody's Analytics, the top 10% of earners account for half of all consumer spending. If you go back to 1990, and no one was talking about wealth inequality in 1990, at least not the way we talk about it today, that number was still like in the high 30s. I'm just eyeballing it, but it was like 37, 38%. And for, basically the last 35 years, it's moved up pretty consistently. But you never had like this golden age where it was like, oh, the top 10% of earners are 15% of spending. No, like it's always been somewhat skewed there. So this is not an entirely new phenomenon, but the magnitude of it is different. And obviously with markets, whether financial markets, housing markets, elevated, it's been a key source of, spending ability in the last couple of years here. Let's take a quick break. When we come back, we're going to be joined by Sarah Foster from Bankrate talking about their financial fraud survey.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
In today's economic climate, managing your finances can be a full-time job. This is Mike Armstrong from the Armstrong Advisory Group, and our experienced team of advisors understands the challenges that exist and the questions you may have when it comes to your own financial strategy. Our new guide is called What Can a Financial Advisor Do for Me? In it, we'll help you find answers to some of those questions. At Armstrong Advisory, we can provide you with information that may help you with decisions about your investments. Our team can also advise you of the need to work with a professional in other areas, such as taxes, estate planning, or insurance. Understanding the role these elements play in a well-rounded financial plan is extremely important. Give the Armstrong Advisory Group a call at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bent you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K will be here before you know it, so mark your calendars for Saturday, November 8th. We'll be keeping you updated on registration information in the coming weeks. But in the meantime, if you want to help our great American heroes right now, just visit dav5k.boston, where you can make a donation today and support programs such as the Veterans Transportation Program, which takes injured vets to their medical appointments. That's dav5k.boston.
Joining us now is Sarah Foster from Bankrate, joining us to talk about a subject that we bring up on the show frequently here, which would be financial scams and frauds. Sarah, thanks so much for joining us. Appreciate it.
Thanks for having me. Always great to be here.
So anybody listening to this program knows that these have been substantially on the rise over the course of the last few years. It's also seemingly, at least in my circle, a bit of a taboo subject. When people do fall victim to them, they don't like talking about it. They don't like necessarily filing the police report or just admitting to the fact to family, friends, and others that they've fallen victim to some of this because they feel embarrassed about it. What did your survey find when it came to just the power of these financial scams and frauds that are out there these days?
It's true. And a little bit, about the shame that I think a lot of Americans experience when they fall for this. What we found in our survey is that even those who appear to be doing everything right are still looking like they're falling for financial scams or fraud We found that 68% of Americans have experienced at least a scam or financial fraud at some point in their lives, and then 34% have experienced it over the past 12 months. We're seeing across generations, across income spectrums, Americans are still indicating that they're experiencing this, even when they also take steps that look like they'd be the right ways to prevent themselves from falling for it in the future.
These are all obviously evolving. A few years ago, it was all of the, I saw a lot of the, you're in jail frauds, phone calls to grandparents and things like that to wire money. More recently, I've seen a lot of crypto-related scams, investment Ponzi scheme type things. Where are we seeing this go directionally? What role is AI playing? Have you seen any kind of changes to the trend lines on financial scams and frauds over the course of the last 5 years?
It's true. The proliferation of new technologies, there's so many different types of scams, fraud out there. The playground is evolving. Scammers are finding new ways to target Americans faster than they can really come up with ways to protect themselves. There's so many different types. We looked at it in two buckets. It's first is those classic fraud scams, someone using your personal or financial information, accessing it against your will. And then this kind of new area, the second bucket that we looked at, are Americans who are paying for a phony service, sending money to a scammer. Those might be those classic grandparent scams. The dreaded phone call that we hear sometimes happens when someone picks up the phone and it is said that they have to send someone money because they're holding a loved one hostage. That's just one, kind of scary example here. But I think it shows that there's just so many different ways for Americans to fall for a scam, and all it takes is just one mistake that can happen very quickly.
I think everyone's experienced being targeted by a scam at this point, whether it's a text message, phone call, and hopefully largely ignored. But when it comes to actually falling victim to these scams, what are you finding from a generational difference there?
We're seeing here that older generations are most likely to experience fraud or a financial scam, but it's those younger generations who are most likely to send money to a scammer. They're also the ones most likely to lose money overall. So I think what you could really kind of infer here is that there's these more advanced tactics that younger generations are falling for, maybe through social media, through text messages, LinkedIn. We also hear about those fake job recruiters who are offering Americans an interview for a fee. I think, though, that that's kind of breaking from, the stereotype, which is often that it's these older generations who don't have as much technological literacy. They're also the ones getting ready to pass on about $84 trillion in wealth and this great wealth transfer. So I think a lot of people assume they're the ones who get targeted most.
Sarah Foster from Bankrate joining us today to talk about financial fraud survey they conducted recently, and some surprising data there, I think, Sarah, about that younger generation actually falling victim a little bit more frequently than the older ones. Sarah Foster, thanks so much for joining us. Appreciate it. Look forward to chatting with you again soon.
Thanks for having me. Always great to be here.
All right, time for trivia here on the Financial Exchange. And in case you missed it, Domino's just announced that it will be adding stuffed crust pizza to their menus. 30 years ago, stuffed crust pizza was introduced by a different pizza chain with huge success. Trivia question today: which pizza chain originally released stuffed crust pizza? Once again, which pizza chain originally released stuffed crust pizza? Be the ninth person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt. Once again, the ninth correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
You ever do a stuffed crust pizza?
I think I've at least once had one, yeah.
At lunch, at school. That was a very popular item.
Oh, yeah?
Yeah.
Sure.
It was like $1.50 or something.
I agree with you there.
Mediocre cheese.
Have you ever seen one stuffed with anything other than just cheese?
Wasn't there like a pepperoni one?
Can't you mix like a little pepperoni or some sausage in there or something?
Now you're innovating, Chuck.
I think it'd be nice.
Yeah, now you're innovating.
Are home values about to fall? It depends on the location. And what this is getting at is that there is the technical term is ginormous variance throughout the United States in terms of housing inventory relative to pre-pandemic. So I found some data here. This is from Resi Club.
Good old Resi Club.
Sure. Here's what we're seeing right now. There are 4 states in the United States right now that have higher inventory levels than at the same time in 2019.
Florida.
Yep.
Texas.
Yep.
Arizona.
Nope.
Utah.
Nope. The one next to it.
Rhode Island.
Nevada.
Colorado.
Okay.
And one more.
Give me Tennessee.
Yeah, Tennessee.
All
Come
right.
on. Okay, not
pretty
bad.
good.
So, other than that, every other state is below. Arizona, just as an example, only down 4%.
Okay.
Utah, down 2%. So some of them are pretty close. The Northeast, you're screwed. Maine, still 61% less inventory. New Hampshire, 61%. Massachusetts, 54% less inventory. So you've got this huge dispersion in inventory levels. We'll talk about what it means when we return.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income income and expenses, and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, trivia question today was, which pizza chain originally released stuffed crust pizza? That'll be Pizza Hut. Back on March 25th of 1995, they debuted stuffed crust pizza. The commercial Pizza Hut released to advertise the pizza starring Donald Trump. Sean from Munson, Mass. was our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Sean, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
No one out-pizzas the Hut.
That's right.
I've tried. Let's see. So
I would say arguably that Domino's is dramatically out-pizzaing the Hut.
Yes.
Pretty significantly,
yes.
Actually. Yeah.
I would say that. Even though if you're ever on eBay and trying to find, do you remember the old red cups that they used to have at Pizza Huts?
Not really. Were they plastic?
They're like collector's items on eBay. They go for like $30 each.
Really?
Yeah. I mean, as much as a collector's item can be $30, but they probably cost 2 cents to make back in the day.
Oh, yeah, I know these. Yep.
Yeah, of course you do. Yeah, everyone does. Anyways, housing. So you got this piece in the Wall Street Journal. Our home value is about to fall. It depends on the location. In the Northeast, the answer is probably not fall, but it's hard to see how they get too much more expensive. It's just a situation where inventories are generally anywhere between like 60 and 40% below pre-pandemic levels, and so there still is very restricted inventory, and prices can stay up even with fewer buyers just because there's not much on the market.
Right.
On the other hand, Florida and Texas with 9 and 15% more inventory than pre-pandemic, and these prices and these insurance premiums, this presents a problem where prices are already falling in a number of metro areas within those states, and you're very likely to see statewide price drops in those states over the course of 2025.
Now, I'm going to spell out for you why I think you should care, even if you live in Connecticut, which has one of the worst inventory situations out there.
How bad's Connecticut now? Is it still down like 80%?
Yeah, something like that. It's like 30% of available.
It's the worst in the country.
2019. I'm living in Connecticut. I'm never considering moving to Florida, buying a second home in any of these states. Why do I care? You care because Florida, Texas, what were the other states? Nevada,
Arizona,
Tennessee, Arizona,
Georgia.
These areas where inventory levels have either exceeded or come close to where they were pre-pandemic. These are the areas where all the new building has occurred.
Yes.
These are the areas where home developers are saying, why am I going to go bother with that next 50 home development right now?
Not 50, like 500
home development.
A big development in the Northeast is like, hey, we built 85 single-family homes.
Right.
A big one in Florida is it's going to be 4,000 homes over 8 years, and in 5 phases.
And so if you are one of those home builders who's facing this down, thinking about tariffs and looking at, hey, I have no experience building homes in Connecticut. I don't have any people in Connecticut. My people are in Florida. You're probably not all that eager to go borrow a whole bunch of money and spend millions of dollars on a home development right now.
And why this matters is that housing, even though, so when you look at the overall impact of housing, it's not like housing is like 80% of the U.S. economy. I think if you do like the actual numbers for construction, it's like 7 or 8, and the ancillary things get up to like 15% of the U.S. economy. Why it matters is that it's a huge marginal driver of economic activity. And because it's so cyclical, you see big swings in construction. So if construction pulls back by 20% and contractors start laying people off, it's something where, okay, now you're talking about a couple percentage points coming out of GDP, and that's a big swing that you end up getting at the same time that AI is starting to show signs of, fatigue, and maybe that investment's starting to wear out its welcome as far as, infinitely expanding data centers and things like that. So if AI is slowing down, housing's slowing down, and you've got the federal government trying to be more fiscally responsible, where does the growth impulse come from? Right. That's the question that you have out there as you look at it, and that's the one that I think you have the potential to be concerned about over the next 6 to 12 months is, hey, where is the growth going to come from if the areas that typically lead it or that have led it recently are pulling back?
When it comes to housing, there are really few assets out there that play as key a role in people's financial plans as their home. It's oftentimes the biggest single asset that they own. If they didn't own it, it's usually the single biggest budget item that they would need to replace in terms of cost. And frankly, a lot of the old rules that were in place when it came to things like mortgages and debt have kind of reversed themselves over the course of the last decade. What I mean by that is that there's a whole slew of Americans with mortgage rates below 4%. And as we all know, I just mentioned the new 30-year fixed rate mortgage coming in at 6.75%. It raises a whole bunch of questions like, hey, my parents always told me if I made an extra payment on my mortgage every year, I could pay that thing off 5 years early. What should I be doing in this new normal interest rate environment? Whether I am in my existing home and considering a downsize, if I'm looking to retire without debt, what is the appropriate way to play these games given how dramatically mortgage rates have shifted over the course of the last 5 years? It is a question that I think gets raised all the time, and people sometimes just blindly continue what they have built up as habit over the course of their lifetime, right? When you got a mortgage in 1980, it made all the sense in the world to be throwing extra money at that thing because the rate on it was 18%. But what do I do now when I can earn more on a CD than I pay in mortgage debt interest? If you have questions along these lines, you're trying to figure out where housing fits into your overall financial future, please give the folks at Armstrong Advisory Group a call. This is what we mean when we talk about financial planning. It is not just your investment portfolio and how to best utilize it. You can oftentimes get a lot more long-term return by being intelligent about how you address different debt items. If you have questions like that, give the folks at Armstrong Advisory Group a call. The phone number is 800-393-4001. Again, that number for the Armstrong Advisory Group, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, you got any chickens?
I do not. I saw a pretty good, I think it was like I don't have TikTok, so it couldn't have been that, but maybe a Facebook Reels about there's a woman walking down the street and there's a guy sitting in front of a Corvette. And then, just down the street, there's another guy sitting outside a Lamborghini, and she, kind of looks at him. And then finally a guy walks by holding a chicken and a basket full of eggs and falls for the truly wealthy guy out of the three, the one with the chicken, egg-laying hen, and that is the new normal. That is the new world we live in.
There's also the one, it's, a picture of, like, an egg aisle in a grocery store with, like, a table set up in front of the eggs. And it says, take me somewhere expensive.
I like it.
So you've got egg prices going up, and the reason why is bird flu. More than 166 million birds have been slaughtered to contain the virus.
Just 19 last month, Chuck.
19 birds?
19 million
19
birds last month were euthanized to contain this thing.
Now, here's the thing. Before we go further, I know that sounds like a lot of birds.
Well, let's be clear. It is a lot of birds, but I'm sure you're going to contextualize it for us next.
I am. Mike, how many chickens do you think the United States goes through in a year for eating?
500 million.
Tucker, any guesses?
Sorry, I wasn't listening.
How many chickens do we eat a year?
How many chickens do you think?
I don't know.
It's about 8 billion.
Oh, my God.
The planet?
No,
The
the
country.
United States.
Jeez.
Well, you think about it.
Yeah.
Like, how many times a week does your family have some part of a chicken? At least once.
Yeah, pretty much once.
Right?
We're probably twice.
So
Yeah, so that makes sense. Yeah.
Your family is going through 3 to 4 birds a month. Now, you might not all do like the same parts. Remember, like you might be a thigh guy, maybe you're a breast guy, maybe you're a wing guy. But again, like the day where you go into, Buffalo Wild Wings and you get a dozen wings for yourself, that's 6 chickens that died just to feed you. So ultimately, like you do the math, and it's about 8 billion chickens a year that we kill to eat. Now, that doesn't mean that it's good that, we're having to kill, 160 million that would not normally be killed because they're just egg-laying chickens. Do you eventually eat the egg-laying chicken?
Don't know.
I mean, I don't see why not.
Well, I don't know if... So, interesting thing about American chickens. So, American chickens are bred for one characteristic more than anything else.
Yeah.
The breasts. Mm-hmm. Because that's the kind of meat that Americans like. Mm-hmm. The interesting thing is that because of that, they had to be bred with larger feet so they wouldn't tip over. Literally a thing. The feet from American chickens often end up being sent to Southeast Asia because chickens' feet are a thing there, and American chickens have the biggest feet in order to support the chicken from toppling over because it's top-heavy.
According to my AI overview here, you can eat egg-laying chickens, but their meat's typically tougher and less abundant compared to
kind of what I figured, something
the turkey
like
breast
that.
Meat. Yeah.
So what you end up with is that
chicken breast.
The number of egg-laying chickens is down 12%, from about 330 million down to 290 million. Now you might say, look, what does 12% matter? Like, why would egg prices go up that much? The answer is, it's that marginal egg that you are buying. Think of it this way. If you are driving to work normally and your commute has, traffic the entire way, how nice does it feel when it's school vacation week and you say, wow, like this is so much better? It's not that 75% of people have taken that week off. It's usually maybe like an 8 to 10% reduction in the number of cars, but it has a huge impact on traffic because of how it compounds and so on and so forth. The marginal car is what causes the traffic. It's the same thing with egg prices. So it raises the question, hey, is there, something nefarious going on? Like, is this, some kind of egg expiracy? Is this, eggflation that we're seeing? Are corporate profits being, primed by high egg prices?
Maybe a little bit, but it's not the root cause.
Probably somewhere here and there, but the root cause is just not enough eggs to go around because our demand is not that elastic.
By the way, all experts saying that this situation is getting worse before it gets better in order to contain this.
The other thing that's interesting, eggs seem to be one of the only items, not only, they're in the category of toilet paper now, where when the price goes up, Americans want to buy more of them. And I don't know why. Like, you talk to Americans normally and you're like, hey, how many eggs do you eat? They're like, I don't know, maybe on a Sunday I have a couple. And now it's, what, I got to buy 2 dozen every week. Well, why? They're more expensive. I got to buy them.
Any news is good news, Chuck. People are just awakening to the power of eggs in their diet now that the prices are through the roof.
What was the substitute that someone was trying to make last?
Mung bean.
Mung bean, yeah.
It's a, I think it's a product called Just Egg, which I have tried and is...
Are you pro-mung or anti-mung?
Not doing the job, let me tell you that.
I've never had mung bean.
Well, you're not missing anything.
Let's take a quick break. When we come back, we'll do a little bit of stack roulette.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. experience a vibe like no other. And get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
Mike, what do you got for me for Stack Roulette?
I've got a piece here from Bloomberg. Apple's artificial intelligence efforts reach a make or break point, and they lay out an argument that Apple is falling behind in the AI race to the likes of Amazon, Microsoft, and others, Google as well. And I don't disagree that they are falling behind in the AI arms race. I am also unconvinced that it matters. Apple and Microsoft do not serve the same customers by and large, nor does Apple and Google by and large. Google makes a massive portion of their revenue from advertising. And in fact, all of their revenue from advertising to businesses. Apple sells you, me, and everybody else stuff. And tell me, Chuck, where do you see the most artificial intelligence usage today?
Nowhere, quite honestly.
I mean, to me, it's mainly in business settings. It might be some business-to-business stuff. It may be in employees using it for work-related purposes. Apple doesn't need to be here yet. I continue to say that where Apple succeeds over and over again is taking a product that nobody knows what to do with and can't sell, making it more user-friendly for the individual, and then charging a massive markup for the Apple logo to be on it and making it fashionable, usable, and profiting on it. I don't think they need to be here.
And I also think there's just there's no killer app for AI. There's no need for the average person to use it. There's certain use cases where you're like, oh, like it's helpful for this and that, and sure, like it can be. I'm not saying it has no use, but look, let's talk about a few of the different uses. So asking it a question in order to get an answer can be accurate, but can also produce some results that are shockingly inaccurate, like should you eat rocks? 2 a day, Google said, I think.
Yeah.
Other things. If I have to see one more AI-generated picture of something that's not really possible,
or frankly, the number.
I honestly click away from pieces that I'm reading when I see that stuff, just because it's like, okay, I'm done with this. Like, this is useless.
Yeah.
So there's no killer app for it, and when the iPhone first came out, it was, okay, here's what it does. It's your iPod plus like you can call people, and then you started getting like the weather app. Like there was all this stuff you could do on it. What does the average person need AI for? They haven't answered that yet.
The most memorable thing that I can think of was when my daughters were teasing each other about boys, and I used AI to generate a poem to embarrass them. The single, funniest.
But you wouldn't pay for that.
Absolutely not.
No.
Not a chance.
You wouldn't pay for that.
Of course not. And so the average person for their personal lives has no need for AI. Therefore, Apple has no need to develop anything special right now.
I keep seeing these things like, oh, well, AI is going to be your personal assistant. It'll know your schedule and know what you want to do, and it'll help make dinner reservations for you.
Nobody's going to pay for that.
How long does it take to make dinner reservations? I go to the freaking website, I type in if it's there, okay. If it's not, great. I go to the next, whatever. Unless it's going to clean my house, mow my lawn, do my lawn, fine, do all of the actual, stuff that I don't really want to do sometimes. Cool. But if it's going to be like, hey, you might be hot, should you turn down your heat? No, I'm comfortable, thank you very much. Quick break here. We're back here tomorrow in about 24 hours on the Financial Exchange.